Expecting a small pullback, but the market suddenly reverses? Start spotting the first signals with candlestick patterns. We have exactly the tip you need right at your fingertips. All the candlestick patterns you need, with brief explanations. Write in the comments whether you use price action patterns for quick situation assessment or trade based on them, and we'll share our professional opinion at the end. So, reversal patterns. Bullish patterns typically form during a significant downtrend and clearly indicate a potential upcoming uptrend, so get ready to go long. Bullish reversal patterns. Hammer. A small body and a long shadow below. Its shape resembles a hammer. Sellers tried to push the price down, but buyers absorbed the pressure and brought it back up. Inverted hammer. A long, dark shadow loomed above, and a small, vulnerable body was present. Buyers eventually prevailed after a significant struggle with the determined sellers. Bullish engulfing. The large green candle completely engulfs the previous red one. Shift in momentum towards the bulls. This is an extremely bullish sign observed at the support level. Piercing pattern. The second candle closes above the middle of the first red one, the end of the downtrend. Bullish harami. A small candle is observed inside the range of the big red one. Morning star. 3 candles with a doji in the middle. A story of momentum change, a signal for the start of a trend. 3 white soldiers. 3 long green candles gradually increasing. Strong bullish momentum observed after a prolonged downtrend. Dragonfly doji. Long lower shadow and a very minimal body. The price dropped but then came back up. Potential reversal from a significant support level. Bearish or downward patterns work the opposite way. They appear when a trend is exhausted and suggest entering a short position on a reversal into a downtrend. And this is the hanging man. It's the same as the inverted hammer, but appears at the end of an uptrend. Buyers may be losing momentum, with significant selling pressure. The shooting star has a long upper shadow and a small body at the bottom. The uptrend has reached its peak. Aggressive sellers. Bearish engulfing. This is a large red candle that completely engulfs the previous green one. A shift in momentum toward a downtrend. Dark cloud cover, the second candle closes below the midpoint of the first green candle. A significant change in momentum toward the downside. Bearish harami, a small red candle completely inside a large green one. The evening star, the mirror opposite of the morning star, a potential very significant downtrend. Buyers are completely exhausted. 3 black crows, 3 long red candles. Sellers seize control from buyers. Gravestone doji, a long upper shadow with a minimal body at the bottom. The trend is dead, having hit an impenetrable wall of sellers. Trend continuation patterns. Marubozu, green, a large green candle without shadows. Red, a large red candle without shadows. Buyers and sellers have complete control. Momentum candle, candle 2 to 3 times larger than the previous ones, extremely powerful. The price will continue to move in the same direction. 3 bullish steps. This pattern includes 3 short red candles, which are overlapped by long green ones on both sides. This indicates that buyers are strengthening their positions. A continuation of the upward trend is likely. 3 bearish steps. This pattern is the mirror image, consisting of 3 short green candles, which are overlapped by long red ones on both sides. This indicates a weakening of buyers and a possible continuation of the downward trend. Indecision patterns. These are various types of doji candles. We have the classic doji, the doji rickshaw man, and the doji with long shadows. Closing prices are almost the same. Regardless of the strength of the previous movement, there is now no clear leader. Indecision rules the market. Spinning top, a small body between equal wicks, uncertainty for shadows, a flat period. Abandoned baby. A rare pattern with a doji, between 2 opposite candles. Multiple candles with shadows. 3 or more candles with shadows in the same direction. Confirmation of a significant key level, indicating a high probability of a rebound. Tweezers. Bullish. A red and a green candle with similar lower wicks. Bearish. Green and red candles with similar upper shadows. The price respects support and resistance. And finally, a bonus tip from ATAS. Price action patterns are fundamental knowledge that can truly help you quickly spot trading signals. But professionals will always look for confirmation using other tools as well. We recommend doing this using volume analysis, footprint charts, delta indicator, and similar tools. Practice in a trading simulator, such as ATAS Market Replay, to find your preferred and most effective top tools.